try to carve out the day as much as I can using tasks. So Google, I use Google Suites, Gmail, Google Suite through my mail manager, and they have a task manager through that. And so what I do is I make sure that I'm always keeping track of all my tasks in that task manager. And then at the start of every day, I'll go ahead and review for each company or bucket what tasks are open. And then I'll move over 5 to 10 tasks into a today folder.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Jacob Blackett. Jacob is the CEO of Holdfolio. His primary focus with the company is on property acquisitions, financial planning, and business development. Jacob, thank you so much for joining us, my friend, and how are you?
I'm doing well. Thanks a lot, Dwaine.
Yeah, so you're joining us from Columbus, Ohio. Been learning a lot about that marketplace out there. Definitely be kind of asking you a little bit about that area as well. But before we kick things off, would you mind sharing with us, how'd you get started in real estate, a little about your company?
Yeah, absolutely. So I got started in real estate back in 2010 when I was a sophomore in college at the University of Nevada. And I was studying finance and entrepreneurship. And I actually late one night saw an infomercial about fixing and flipping houses. And so this kind of kind of intrigued me. No one in my family was in real estate, and everything through the university, there's nothing offered, no course offerings related to real estate. So I was like, oh, this is interesting. So I did a little weekend seminar that led to doing some fix and flips while I was in college. And then when I was graduating college, I basically had two choices: go chase the kind of corporate ladder, financial, CPA, that type of route, maybe investment banking, or this real estate thing, maybe just go out and get a nice fix and flip operation going on and build a portfolio of real estate. And so
Nice.
I chose the latter, obviously. And so, when I graduated, I actually moved from Nevada, where I was born and raised, out to Indiana to be closer to a girlfriend who was going to Purdue. So I moved to Indianapolis and just didn't get a job, got my real estate license, and started wholesaling, fix and flipping properties, single family homes.
Nice. Yeah, it's kind of similar starts with me as well, because I saw a road sign that said, weekend seminar come, it was like the Tupperware party where they have all these different gurus and they're just talking about, different courses. So I ended up joining that way. So that's awesome to hear that you kind of got your taste in real estate there. As far as kind of like your current business, like you kind of started in the wholesale and the single family stuff. How did that transition work from moving from there over to, like larger stuff? Or do you also do the fix and flip as well?
Yeah, I don't do any single family home transactions any longer. But basically how it worked is back in 2013, 2014, I was doing a lot of fix and flips, a lot of wholesale deals on the single family side. And some of the early real estate crowdfunding sites started to pop up. And so through those sites, I got a little bit of exposure to some of the other types of deals being done in the country that I had not seen before. And then what I also witnessed that was really intriguing was the fact that they were raising and sourcing equity online for these deals. And so that concept of being able to build an investor network online and raise capital for deals was really intriguing. And so I actually just kind of looked at what I was doing personally. And what I was doing is I was doing wholesale deals, fix and flips. And then I was just keeping just basically cherry picking the best deals when I could to add to my personal rental portfolio. And I just, it was just going slow. That process of trying to take after tax dollars and keep real estate, I mean, it can be phenomenal, but it just takes time to you can't print the money out right off the trees. So I started looking at what I was doing and said, you know what, what if I just buy 10 rental properties, and at that point, go ahead and open the door for investors to come in and invest, put them into an LLC, let investors come in and invest 10,000 or more to get ownership piece in these 10 homes. I'll get my cash back, make a little fee up front, and I'll keep 30% ownership. And I'll do all the management. I'll, of course, see those properties through, and we'll just own them as partners. And so that's what I kind of dreamed up. And then through that process of actually doing that, I learned that what I was doing was actually syndicating real estate. And so that was a new term for me, like syndication. Oh, wow. And so I got with securities attorneys and started learning about peeling the onion back on the whole syndication model. And I ended up doing 10 portfolios of single family homes was my start to syndication. And then realized that from a cash flow perspective and operations perspective, apartments was going to be my next step up. And so actually ended up meeting an individual who said, you know what, stop wasting your time, just go buy an apartment complex. And I was like, what do you mean? And he's like, it's the same thing. You own 150 single family homes right now. Go buy an apartment complex. It'll be easier. It'll be much easier than what you've already done. And being able to accumulate 150 single family homes. And so I went out and started looking and bought a 46 unit apartment complex, and it was actually a little bit of a breath of fresh air. And then rolled that into, currently we have about 650 units total under ownership.
Nice. Yeah, beautiful to hear. So, so far as your company Holdfolio, you said you have, you said 460 units right now?
650.
650, I'm sorry. So are you guys like a fully integrated sponsor? So you guys are buying the properties, managing, raising the funds, doing everything yourself?
Everything.
Nice.
Coming from basically part of getting started in real estate for me is I got to meet some people in Indianapolis and worked in a property management company while I was doing flips and wholesale deals, and they're managing over 1,000 properties. And as I started owning real estate myself, I flirted with third-party management, and it just never seemed to work. And I know people certainly make that work, but for me, it just didn't happen. And so right now we're fully vertically integrated. We manage all of our own properties. We're licensed GC. So we take a very hands-on approach.
Wow, I like that a lot. So is the majority of the portfolio in Indiana, or is it in Columbus as well, or?
So the majority is in Indianapolis Metro. And we also own properties in Ohio, Kentucky, and Texas.
Wow. And then as far as kind of like your your growth, like what can you kind of talk us through? I know a few investors out in Indiana. Can you kind of take us through the characteristics? Obviously, you being there for a while, you know it's like part of your backyard. But can you tell us, for the folks who are listening, about the Indiana market that's attractive to you?
Well, really, I transplanted from Nevada to Indianapolis, and the reason that happened was not very strategic, aside from I just wanted to be closer to a girlfriend. And so it wasn't a really deep dive analysis of all these different markets in the country and choosing to be there. But I'm very grateful that I ended up there, because the Indianapolis market is very steady. It's got consistently good unemployment rates, which are typically under the national average. It's got job growth, population growth. It's not wild. You're not going to see it as the fastest growing city or top 10 fastest growing, but it's positive. And
Hmm.
if you look historically through recession cycles, it's pretty resilient. It kind of just chugs right along through. If you look at the most recent Great Recession, for example. So from that angle, I really like the idea of holding real estate there because it's more of kind of more of a stable bet. We're not going to. There are some neighborhoods, and I've invested and owned some properties where we see 5 to 10% appreciation every year. But from a market perspective, it's not going to be that type of market, but it's more steady, and we've really enjoyed it.
Yeah, I heard a lot of great things about that market, and always learning more things about different markets. I talk to investors all over the country. It's kind of since that, given that history of kind of like more stable, throughout the cycles, are your portfolio there more of like longer term hold, or are you guys also just watching for any opportunistic opportunities to sell and kind of make money, or you just kind of want to hold it as long as possible?
Yeah, ideally, our play is that we purchase value add properties where in 3 to 7 years we can go ahead and get a refinance or supplemental loan that'll get the majority, if not all, of our capital back to ourselves and to our investors. At that point, we're in control. We can continue to own and operate that property into the future, eventually selling on our terms and our timing.
Mm,
So that's kind of our ideal scenario. If the property, for example, we did sell our first property we purchased, the 46 unit. It just wasn't ideal from a hold perspective. A little bit smaller. It was on boiler heat, phenomenal area. We went ahead and tested the market a little bit and got an amazing offer. And so said, well, let's go ahead and sell this. Get focus on larger unit sizes, 80 plus units. We actually closed 156 unit was our most recent deal. We closed about a month ago, and
wow.
so yeah, that's kind of just the angle there. But definitely look towards more of a longer term play. But that doesn't mean we wouldn't sell it if we feel like it's a strategic.
Nice,
Good.
nice. The deals that you guys did in the past, were there more, I mean, given you guys had like GC and construction capabilities, were you going for more kind of like heavier rehabs that other investors will kind of like not go into, or you guys more kind of just something that you can turn around like managerial wise?
Well, I think certainly given our scale and our operations, we haven't shied away from anything regarding renovation or occupancy levels. And I think certainly there's probably people that would not want to step into that, but a couple of our deals were in the 50% occupied, and we're spending 12 to 15,000 a door on
Mm,
renovations. So yeah, we do pretty heavy lifts.
nice. The new markets that you guys are in, are you also doing the same model where you guys are fully integrated in there? Are you also JVing with other sponsors in new markets?
Yeah, we're actually we do own a property down in Texas in the Dallas Fort Worth market. That's a market that I really wanted to get some exposure to,
Mm,
but it's a little bit difficult to be so hands-on and build up a team there. And so I actually partnered with another veteran operator down in that market, and so we own that property together. And I'll probably look at doing some more of those types of partnership scenarios where historically we've been the only sponsor or general partner in the deal. And so we'll probably look through as we expand to more opportunities to partner with other sponsors.
nice. Can you kind of talk us through that acquisition? Like, how you said that was the latest one with 150 plus units or something like that?
Yeah, our most recent acquisition was 156 units, and
Hmm.
that one was on the west side of Indianapolis.
Okay.
And so that property we actually got in touch with the owner about 2 years ago,
Mm,
and was just staying in touch with them. The first conversation, they weren't ready to sell, but thought maybe sometime sooner than later. So we were basically following up every month or every couple months saying, hey, what's the status? And so after a couple of years, we finally got through to the closing table
Mm.
on that property.
Congratulations. And then where kind of you see the company moving in the future? Are you guys just going to be tackling other marketplaces or any other marketplaces that you're on right now?
Yeah, basically anything within a 3-hour drive of Indianapolis, reasonable day trip for our team. We're looking at pretty active acquisition opportunities. And then outside of that radius, we probably look at more of strategic partnership scenarios where we can come in and do more of kind of the underwriting up front, some more due diligence, investor relations, raise some capital, and kind of have that type of partnership dynamic with other
Mm.
GPs.
Very cool. We had talked a little bit because I had saw a webinar with featuring you with your a software that you have. Love to learn more about that because in the syndication business, of course, managing investor relations and just like that whole process can be talk to a lot of people can be a real big headache. And it seemed like you are able to figure out the way to simplify that process in a easy to use software. Can you kind of talk us about what that is and how it helps investors?
Yeah, so I kind of natively really love to create systems and automations and cut time and make things better. And so what happened and how this came to be is, like I mentioned, back in 2013, 2014, I saw the crowdfunding sites sourcing capital online. And so I went out and built my own site, gave investors a login, teamed up with a web development company, spent a ton of time and a lot of money doing this. But after about 9 months, I was able to source capital on my first deal through my own website. And so that parlayed into doing 16 online syndications in the last 4 or 5 years personally.
Mm.
And so once I got some traction with that model of raising capital through my website, I was having colleagues ask me, how do we replicate what you built? I mean, I have people say, hey, can we buy the code to the site, customize it ourselves? And so these questions kind of got me thinking. And back in 2013, 2014, when I went out to do this, there were no solutions. There were no companies that would offer you the opportunity. If you wanted to raise capital online, that's something you would have to build yourself. And so about 1.5 years ago, I actually learned that other companies were offering this service to sponsors, to syndicators, as investor portals. And so I demoed a handful of them and realized that what I had built was actually really on par, if not better in some scenarios. And so I pitched the owner of my web development company, Meta, and said, hey, I think we have an opportunity here. I have at least half a dozen or a dozen people who would be interested in using the service, just from colleagues who syndicate deals. And so we went ahead and polished up the corners and created Syndication Pro, and launched that in January of this year, actually. And it's been going really, really well. It's a blast. So I do split about 50-50 between the two companies, Syndication Pro and Holdfolio. So I kind of am really loving where I'm at. I get to focus on real estate and operations and doing deals, what every syndicator wants to do. And then I also get to nerd out a little bit on my systems and automations. And it's always a blast to have a colleague or another syndicator sign up and raise money through that online process and just give feedback like, wow, that was, I can't believe I raised money differently. So it's been really fun.
Yeah, the beautiful thing is, like I said, because you created all these systems, along the way. I always have these different tools and stuff that kind of help my day go better, and like my calendar system, like I can't live without it. And it's just like, got to have systems. So you're able to create that so you can be able to split your time to in between the two businesses. So that's great. Um, it's kind of learn a little bit more about you. What's kind of like a typical day for you, and then do you have any special morning routines?
Well, certainly I have some routines that I like to stick to as much as possible. And so usually what I like to do is try to carve out the day as much as I can using tasks. So I use Google Suites, Gmail, Google Suite through my mail manager, and they have a task manager through that. And so what I do is I make sure that I'm always keeping track of all my tasks in that task manager. And then at the start of every day, I'll go ahead and review for each company or bucket what tasks are open. And then I'll move over 5 to 10 tasks into a today folder. And so those are the 5 to 10 tasks that I basically in the morning have identified that I want to knock these out today or work on, and then I'll organize them in what order I'll do them, and then turn off the Gmail or the inbox, and I just start with a task and just knock out. Usually I like to knock out 3 tasks. Then I'll check in on my inbox, do a kind of a batch, get through those emails as fast as possible, turn it off again, get back to the task. So I think that being able to switch from those tasks to the inbox, because you could hang out in the inbox all day.
Oh yeah, yeah.
Just respond to things and just find things to do. And so I've found that's been really, really helpful. And then I review, I call it a hot sheet, but basically I review a sheet that I've just put some things and then I would build on it. But what it all these things I'm grateful for. So I try to review these. This is in a note. For make tweaks, add to it, remind myself of what roles I'm playing in my companies and what I'm expected to do. What are those highest value things, and what am I charging? What am I leading? I look at my long-term goals, my short-term goals, remind myself of some of the things I'm good at so I can focus on those in terms of my character strengths. And then I look at, I have on here some value propositions for the companies that I own. Like, what am I bringing to the world? How am I helping people? And so, for example, with Holdfolio, finding good investments is difficult for passive LPs. I mean, finding good investments are difficult. So Holdfolio, we give people an honest and transparent way to earn good returns so they can grow their savings in order to live better lives, right? So that's a really strong value. So basically, these type of value propositions just help me stay engaged and help keep me excited about what I'm doing every day. So that's daily routine type stuff that I like to do.
I like that. There's so much detail there, and like I said, those real good things for people to take away from there. And kind of, you had mentioned a little bit regarding gratitude. I know, like, you had tremendous success. You got like a lot of these plans. Seem like you love helping and giving out. Even just doing this podcast, many listeners are going to listen to this and get a lot of value out of it, and hopefully change their lives. What we can say is, you're most grateful for.
And so, in the moment right now, in terms of what I'm most grateful for, is people in my life, right? So, amazing wife. We're actually expecting a baby. Our due date is less than a week from now.
Congratulations.
So, yeah. So any day now, first baby.
Joining the club.
Yeah. So it's very people driven. Very grateful for my health, flexible work schedule, and I think those are the types of things that really resonate with me.
Beautiful. Jacob, so how do we get in touch with you?
Well, you could reach out to me and anyone personally. My email is jacob@syndicationpro.com. Feel free to reach out to me. I would say that if you are interested for anyone who's listening to this podcast, I'll give you a deal on the software. So if you just mention this podcast, mention Dwaine, if you're checking out the software, you think it's something that would be interested to you, I'll give you a free month. We do a 2-week trial. I'll give you your first month free as well. So if you're checking it out, definitely want to thank you for being part of this podcast.
Beautiful. I really appreciate that. Again, we'll have that in the show notes, and just, let people know, just to get the word out there. Syndication Pro, and just, mention this podcast, and like I said, try it out. Because like I said, I think it's going to definitely have a real good impact on your business. So, Jacob, thank you so much again. Blessed to have you. Like I said, great talking to you and talking to other investors, especially out there in Indiana. Congratulations on the new addition to the family.
Thanks.
And look forward to connect with you again soon.
Thanks a lot, Dwaine. It was a pleasure.
All right, take care, my friend.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.